right now, a new report for the half year 2018, the second half of the year from Afrinvest, I beg your pardon, a bit of an acronym there. So this is one report. You want to listen to this conversation with Ike Chioke, the Group Managing Director of the organization, here with us in the studio. Good morning. Good morning. It's good to have you. Thank you very much. Let's go straight into business. If you look at this report, and the executive summary is about 20 pages, that's quite heavy. I thought the executive summary ought to be just about 1-2 pages.
Well, there are a lot of issues to discuss. 20
pages, executive summary, that's a whole report on its own.
Thank you.
So what's the summary here? What's the summation from the macroeconomic indicators that perhaps will help us deliver a very good outlook from the monetary side?
Essentially, we've titled the report, Where is the Growth? When you look at the combination of issues happening in the economy today, we are doing a half-year report on the market performance, but at the same window that the budget has just been passed. This was the budget that was delivered back in November 2017. At the same time, we can see the signals as we begin to, activities begin to pile up for the election cycle for 2019. So there are quite a lot of issues coming out there. And when you look at a country like Nigeria, what is lacking today is that kind of robust growth to propel us into this sort of economic momentum that we see. From a fiscal side, from a monetary side, the CBN has been doing, the usual, maintaining MPR where it's been for the last, 7 periods, But when you look at what's happening in the developed markets, you've seen that growth is now around 3.8. It's gone from 3.8 projected to 3.9%. When you look at the developing markets, China still maintains the momentum at about 7%. When you break it down to sub-Saharan Africa, you see an average growth position of 2.8%. And that's actually being dragged down by Nigeria, where last year we managed to do only 0.8%, climbing out of the recession of 2016. And Q1 2018, we managed to just touch 2%. So when you look at the underlying fundamentals of Nigeria and all the great plans the government has put in place, what we're really lacking is growth.
So where is the growth? Here you put in your reports that the central bank may do a politically induced MPR haircut in third quarter.
We're assuming that the CBN will probably keep MPR where it is, but for instance, people will continue to suggest that at MPR, with MPR at 14%, it's not, beneficial for private sector companies to borrow. And, if it becomes a campaign issue, it could be that they may be convinced to bring it down. But I think that on balance, we'd expect that they will keep MPR where it is. This is simply because the air is being sucked out of the Nigerian economy by the faster growth in the developed markets and also the normalization of monetary policies in those markets. The systemic central banks, the US Treasury, European Central Bank, Japan, Bank of England, all of them are raising rates. And as that's happening, money is leaving developing economies and moving back to the developed world. So for us to attract money, we have to do something much more fundamental than monetary policy.
We need to do something fundamental, so we have a fundamental billboard, and that's the ERGP, which this administration says, well, this is our economic roadmap, the most extensive since the NEEDS program, which was articulated under the Obasanjo's administration second term. So, but do you think the current budgetary cycle and spendings, both on social investment and on infrastructure and paying salaries, will be able to deliver these short-term, or well, if you want to call it medium-term, ERGP program?
Well, the ERGP plan, as you've mentioned, is the most articulated economic plan since NEEDS, but we think it's actually scratching around the edges. It hasn't really dealt with the germane structural
the core
issues.
of it.
Yeah. And if you think about what we've done in the oil and gas sector, that remains the albatross, the big elephant in the room, blocking all progress. We've continued to maintain the subsidy in the petroleum products, and that, this government itself has spent, in our estimation, about 1.4 trillion since it came into office. Although there's no line item in the budget that says subsidy, but it's packaged under a different arrangement. That is shocking when you're looking for money to fund education, if you're looking for money to fund healthcare, and these are, critical human developmental factors in a world where the capacity and the quality of your human capital is critical. If you have a lot of people but they're not educated and they're not healthy, they're not human capital. They're just people taking up space. And then it leads to other social issues, and you can see we have a plethora of social issues. You don't want to even go into that space. Boko Haram, Niger Delta, restive youth, unemployment all over the country. So, but coming back again to the budget, what we've seen with the budget is that the revenues are not catching up with the estimates. Whereas the budget of last year was about 7 trillion, this year has moved to 9 trillion, 9.1 trillion. But similar to last year, when they had budgeted total revenue receipts about 5 trillion naira, we saw that by 9 months 2017, they had just done about 3 trillion. And we then estimate that they will probably end the year with 3.7 trillion. This year, as you go into the new budget cycle, we fear that the actual revenue receipts, particularly from oil revenue and non-oil revenue, will drag. What has actually been funding most of the government is what you see other financing sources, maybe returns from Paris Club, the spread between the official exchange rate at 305 and the market exchange rate at 360, maybe money coming back from looters and some of those things. So, but where is the fundamental growth? And for the country to grow, in our view, we think the country needs to step back and begin to focus on those fundamental inhibitors, like deregulating the oil and gas sector. If you deregulate that, you attract massive investment into the downstream sector, and then you see more investment in the upstream. And we need to create employment for the teeming masses.
With elections around the corner, this is what you wrote on page 5 of the executive summary. He said, notwithstanding our reservations on the potential feasibility of the budget, we believe there are still bright spots, especially in terms of proposed capital spending on key infrastructure projects with propensities to unlock growth in critical sectors of the economy. You're hopeful that this flickering candle will not be blown out entirely by the wind?
Well, we expect that the government will not shoot itself shoot its own foot, because it's going out for election. They want us to be convinced to return them into office next year. So they might as well spend this money they've been holding back for several years. And they will have to do something to demonstrate to the electorate that we should come back. And so we expect that, despite the delay in passing the budget, that they will begin to really disburse some monies to a lot of contractors to try and conclude some of these massive projects or some of the bigger, more visible ones that we can see. So the president can go around the country commissioning projects and build on that as part of the election campaign. So we'd expect that they would like to do that. And we'd also expect that the election spending itself would throw money into the system and at least, create some, more liquidity for all Nigerians. And that would also be buoyant for the country. Though we expect that CBN may feel that they will have to counter it by increasing their open market operations and, to avoid, causing unnecessary inflation in the system.
But well, let's talk, let's chat a little bit after the break to the markets. And this is where we're looking at your revised outlook on the equities market, at least for the bear case, the bull case, and the best case. It looks like the numbers have changed.
Yes. Things have changed.
Things have changed.
Yes.
Things always change at the market, isn't it? Numbers always change.
Well, in light of the way the half year has gone.
The first half.
Yeah, we saw that investors came into 2018 excited about the momentum and the market returns of 2017, where Nigeria was the best performing market in all of the frontier markets, and I think the third best performing market overall in the whole world. So you saw the market ride up to 17.9% during January alone, with some of the tiny companies, the tier 2 banks going up 100% within a month. Now, having gone through that euphoria, what we've then seen that the market had entered the year with some expectation that there'll be more fundamental things to drive it. But as soon as people began to see there's really nothing, it's all technical issues and people taking advantage, the market has given up all its gains. And plus what I explained earlier in terms of what's happening outside of Nigeria and the developed markets.
What should I take? A base case, a bull case, or a bear case? But I'm worried about you. Where do you get a bull case, guys, of 18.3%?
Well, if as a consequence of planning for 2019 return, the government does something quite daring and brave and begins to tinker with the fundamentals of the economy, you could see a reversal of capital flows into the country, and that would be sufficient to drive the markets. On that side, we're looking at a bull case of 18% thereabout, which is consistent with our original projection for the year. But our probability weighting on that is only 20%. We're looking now that a more realistic case, our base case, would be about 10%. But on the downside issue, if things continue as they are, we expect the market to end up relatively flat, say about 2.2%. That would be our bear case in that regard. I think that the issues happening in the developed markets continue to weigh in on Nigeria. I think that our lack of a decisive approach in tackling our, in-depth problems is also one of the issues. And of course, when you add other things like the insecurity in the country, the way that democratic institutions are being harassed, all of those things contribute to the confusion and complication, for the market. Yeah.
What's your outlook on the debt market?
The debt market has actually performed, reasonably well. The country, as you see from the budget last year, the government that's really one aspect of the budget that government maintains is projections. They did about 1.8 trillion planned borrowing last year, debt service, and this year they're looking at 2 trillion. Because we have such continuous activity in the debt market, we would expect that the debt market would be supportive to investors. So we expect that to do well for investors.
We've got to wrap up this conversation. You got about a minute, and I got one of our viewers put in this comment on your earlier conversation about deregulation. Yes. And it says, Ipemosa says, that's on Twitter, it says deregulation is not a viable prescription for an index product in Nigeria, which is petrol. So we've bandied deregulation for the last 5, 10, 20, 30 years. We haven't resolved it. You believe deregulation is the way to go? I
think that it is the place to go, because if you really look at what is happening, today they suggest that we use 60 million liters of petrol a day. I don't think that we actually do use that. So when we are not deregulating, we're effectively subsidizing our neighbors or passing money on to some people, but clearly it is not coming to us. I'd rather, as a government, subsidize production than to subsidize consumption. That is really the core. And if you think of electricity, it's more efficient for the government to go deregulate, go to a cost-reflective tariff, which will solve the power problem, and then use the subsidy money to subsidize electricity, because you can actually more easily target the places where you want to subsidize, rural areas, medical facilities, educational facilities. And it's easier to measure it than this unknown space of trying to deregulate
of jerrycans of
and
petrol.
Frankly, it's the wealthy people that use petrol. It's not really the poor people. It's the rich people in Lagos, Abuja, and Port Harcourt that have multiple cars that consume the petrol.
Multiple generators.
Yeah, well, actually, diesel is not subsidized. That's the issue. So we really have to face.
So maybe we just need to do a bit of a census here to find out who uses most of this petrol and diesel, and find out if that comes to me. Because the barber shop, they just use about 4 liters for a day or two.
Even you don't have to do a census. If you go outside of Lagos, Abuja, and Port Harcourt, the price of PMS is, close to 200 naira. It's not 145 like it is here.
Interesting.
So the rest of the people are carrying the burden. It's the elite that are enjoying it.
Ike, let's have this conversation some other time. Let's check together in a few months down the line, before the end of the year once again, and find out if the candle hasn't been blown out by the wind.
Thank you.
Thank you. And thank you everyone for watching. Goodbye from Lagos.